Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with Wall Street, where stocks closed lower overnight. Fed Chairman Jerome Powell saying the Fed underestimated how long the current inflationary pressure would last, and so the Fed is going to act aggressively if it needs to. This retreat in the markets also coming off last week's major rebound. What's the story in the global markets?
Yes, as you said, the regular trading day on Monday, the Dow fell by about 0.6% and S&P 500 declined very slightly by 0.04%. And also NASDAQ composite lost about 0.4%. This move came right after the Powell has been talking about the possibility of a faster rate hike, that he's saying that it could increase more than just 25 basis points if needed to curb the inflations. Now the possible chance of the 0.5% rate hike has increased to about 60% plus in terms of the probabilities. With that, we did see the markets correcting. On top of that, we saw quite a bit of surge in the oil prices on Monday because of the news that Europe is weighing a ban on Russian oil. This basically pretty much dampened the sentiment of the investors for the time being. However, though, market did recover towards the end. It did go down to as high as over 1% plus for the NASDAQ, but it closed at 0.4% decline. The reason for that is because Powell is talking about how the economy is very strong. Despite the faster pace of the rate hike, he is thinking that the economy of U.S. can withstand that kind of rate increases in the futures. Also, we did see that quite a bit of numbers coming from the Nike earnings. We did see 6% after hours trading rise because of the earnings and revenues beating. So that is in line with what market is talking about and what Powell is talking about, where U.S. economy is quite stable. If you look at the overall futures market of U.S. right now, it is slightly up. So therefore, this is indicating that market seems to be kind of taking the faster pace of the rate hike as not necessarily a very negative news.
Well, looking at bonds, we can see now the yield on the 10-year Treasury shooting up to above 2.3%, the highest level since before the pandemic. Forward contracts show the 10-year yield could fall below the 2-year yield in the coming months, which would be an indicator of recession. What do you see happening in the bond market right now, especially in light of Powell's comments?
Right. With the comments coming out from the Fed, right now, if you look at the 10-year government bond rate of U.S., it is at 2.33%. And also, if you look at the 5-year government bond rate, is at 2.35%. So the yield curve towards the longer end has inverted. As for the 2 years, the spread, it has reduced down to only about 15 basis points. So clearly, yes, there's uncertainty that that rate might go down to zero in a near term. Now, however, though, that doesn't mean that the economy will fall into the recession immediately. Historically, the average is that once the 10 minus 2 year spread goes to zero or below zero, about 19 months is needed for the recession to start. That's the average of a past 8 incident. So therefore, we'll probably have extra about 2 years into the future. On top of that, what we need to look at is not just the 10 minus 2 years government bond rate spread. It is more of the 10-year and 3-month government bond rate spread. And that spread right now is at 1.6%. So it's quite a bit of a spread. We need rate hike to be much faster, and that the Fed rate needs to go above 1.5% in order for that rate to invert it, become zero. So which means that we're not going to see that happen until end of this year or probably sometime in next year. So we do think that there's some more room for the possibility of recession not happening immediately. And on top of that, I don't think that the Fed is saying that they will do a 50 basis point hike. It is that they will be fighting the inflation if necessary. So we need to watch carefully of what happens to inflation in the future. We think that inflation number will be gradually dwindling down from the peak that we are seeing right now. So therefore, once we get towards the end of the year, the speed of the rate hike will be more reduced, we think, and therefore we shouldn't be too worried about the economic recession that happens immediately.
Well, today in the Korean market, the Kospi and the Kosdaq both closed higher. Foreign investors were still net sellers. That gain was driven by institutions. Energy and defense shares doing especially well today. Tell us about the domestic market.
Right. Despite the foreigners are net seller of about 115 billion today, we did see the market doing quite well. We saw a Kospi going up by about 0.9%. and Kosdaq going up by 0.7%. And now in terms of the Kospi, it is now well above 2,700. It ended at 2,710. Based on our calculation, the worst case scenario basis, Kospi at 2,700 is a very cheap valuation, and we think that that should be the bottom of the price range. So we do think that the market has more room for the further rise. On top of that, if you look at the futures market, foreign investors were a major net buyer of the futures market. They used to be the continued net sellers in the past about a month or so because of the currency depreciating. But we are seeing currency fairly stabilizing. It did pick up to about 1240 plus at the worst case, and now it's down to about 1218. Yes, it is slightly going up recently, but nevertheless, it seems to be much better than what used to be about a week ago. So clearly, the indication is improving. And also, if you look at the institutional investors, they are net buyers of today. We did see about 285 billion won worth of buying. All in all, if you look at the valuation-wise, we think the Kospi is extremely cheap at the current valuation. Yes, there are concerns about the export growth rate slowing down, but nevertheless, it is surplus. So therefore, we think that the valuation is too cheap on the basis of what we've seen in the past 1 year or so. Furthermore, with the new president coming in, we think that ample boosting measures could happen. Therefore, the economy might be stabilizing. If that's the case, we think that there will be more room for the Kospi to further rise in the future.
Right, and speaking of the new administration, tomorrow the government is going to announce the rate at which it's going to charge property taxes this year, the appraisal value or the fair market value. It's also expected to ease the burden of holding taxes on homes that people live in that have risen in value by a large amount. These were all policies that seemed voters wanted in the election earlier this month. What do you see coming in terms of real estate policy?
Yes, as you said, the government is expected to freeze the property taxes for the entire homeowners, including owners of one expensive home, with an officially appraised value of over 1.1 billion, which is about 905,000 US dollars, subject to the comparison real estate tax according to the government. Now, on top of that, we are seeing quite a bit of relaxation in regards to the lending side of the banks. So the chunse, or the amount that is rental way of Korea, now the government, the banks are saying that they will raise the limit to 80% of the value of the property. All that is a positive news in terms of the flows. We think that the controlling the property prices restriction is not the way to go. It is more of a supply and demand issue. We need to see more of aggressive transaction happening, and this kind of new regulatory environment would allow the transaction to increase in the future. The further transaction happens, we think that the price stabilization can happen even further. So therefore, we think that these kind of news are positive for in terms of the money flows. We need to see the money flow to be accelerated in order for the economy to improve in the future. The property market has been quite of a bottleneck because the property prices will keep going up. If you look at the prices last year, it surged 19%, and clearly this year is further increased. So with this kind of property prices rise while the transaction goes down by a significant amount, that causes the money velocity to go down significantly, and that causes the economies to do poorly. So that's the cost of what we saw in the past due to the poor, probably, policy measures in terms of the real estate side. We think that the more of deregulations and allowing the transactions to happen further will cause the market to be much more stable. And the economy is in probably good room to be improving in the future.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.